I've been following this particular stock called GameStop that has gained legions of fans, particularly amongst the millennial generation, and has made a lot of them millions of dollars. In fact, one of the traders was up almost $31 million in profits on this one particular stock alone. In this video, I'm going to talk about the specifics of this trade and how many millennials hit it big with this stock. Hey traders, this is Mike Sir here. I've been an active trader for over 21 years and a trader coach for the past 15 years. In my videos, I profile all the top traders in the world and teach you how to replicate their incredible success. I've been very fortunate to train many successful traders, and in this video, I'm going to talk about the crazy amount of wealth generated by millennial traders on this company's stock called GameStop. Now, GameStop is a video game retailer with over 5,000 physical stores worldwide. About 2/3 of it are in the United States. They sell video game consoles, gaming computers, accessories, and video games. Now, there was this trader named Gill who managed to spark a massive buying frenzy in the company's stock and helped turn many traders, including himself, into multi-millionaires, but caused big losses for established hedge funds, including one hedge fund that almost went bankrupt. Now, Keith was by no means a Wall Street veteran. In fact, he's a 34-year-old American who wears cat t-shirts and a collection of headbands while running his Roaring Kitty YouTube channel from the basement of his rented residence. What he was known for was the value investing advice that he regularly posts on the Reddit forum Wall Street Bets. He and his legion of fans were able to band together to push this company's stock to its stratosphere and stick it to the hedge funds. So in this video, I'm going to analyze this trade and show you exactly how this trader was up as much as $31 million in profits on this trade. The main premise of this trade and what sparked the big interest in this company's stock was the fact that many hedge fund managers were very bearish or negative on GameStop. Now, they were not wrong because the company was a bricks and mortar shop struggling in the digital era, especially during the pandemic, where customers would prefer to buy everything online. The company's sales were declining year over year and were closing physical stores left and right to stop the bleeding. The company wasn't in good shape, hence the reason why many hedge funds were betting on the stock going lower. Now, however, the company's prospects started improving in 2020 when an activist investor named Ryan Cohen acquired a 12.9% stake in the company. Now, Ryan was the co-founder of Chewy.com, which is a specialized e-commerce retailer of pet products that was acquired by PetSmart for $3.5 billion in 2017. Now, he pushed the company GameStop to adopt a similar strategy that would transform the company into a specialized e-commerce retailer of gaming products. Now, this positive news certainly helped push the stock price higher, but was not the main driver. In fact, the big driver was the fact that many hedge funds were short the stock. The rationale was that if enough buyers were able to rally together to push GameStop's price higher, then those hedge fund managers who were short would be forced to exit their positions at a loss. On Reddit's message boards Wall Street Bets, many retail traders gathered together to discuss a strategy called short squeeze that could hurt these hedge funds who were betting against the stock. The squeeze scheme worked perfectly and turned the little guys, including Gill, into millionaires, and I'll explain the short squeeze strategy in the next section. So here's a price chart of the GameStop stock for the past 10 years. So this stock has done poorly over the past 10 years. You can see that it hit a high here in November 2013 around $57, and ever since then it has gone down. and you can see here basically hit a bottom of around $4 in 2020. Now let's take a look at a more detailed look of the GameStop stock in 2020. So as I mentioned, in 2020 the stock basically hit a low here, and you can see that it actually hit a low here around 250 in April of 2020, and you can see here it went up very sharply to around $6, kind of went sideways for a bit, broke out right here at the $6 level, went a little higher, reached essentially this $22 level. That was a key level, and ever since the $22 level, it basically exploded up to as high of $480 before coming down to about $40 as of this recording. Now let's analyze when Keith Gill got into the stock. Now, from what he has publicly stated, Keith started off with initial capital about $50,000 and started buying the stock in June 2019 when the stock was around the $5 level. So you can see basically around right here. Now, essentially that was not the best price to buy it at, because a little over 9 months later, the stock price fell over 50% to $2.50. So essentially right here. So Keith at that time, after buying the stock, was down over 50% from his initial investment in only 9 months. Fortunately for him, his patience paid off as the stock started gaining traction and he started profiting off his trade. In addition, he started buying call options to boost his investment in GameStop, and from what he has disclosed, he started taking profits off the table as the stock price exploded. So I mentioned to you here is that the stock basically really went parabolic once it hit above over $22. You can see here from $22 all the way to $408 in a matter of weeks, and then again falling very sharply after that. So from what he kind of disclosed is that as the stock price exploded higher, he was taking profits along the way. Now, there's really no use in terms of analyzing when he actually took the profits in his position, because essentially the stock price went parabolic and the gyrations of the stock up and down was very hard in terms of analyzing when he actually got out. But you can see that it was almost a 9,600% profit if you take into account that he bought the stock at $5, and assuming that if he was able to sell it at the top of $480, that's a 9,600% return. But essentially the main reason why the stock price went parabolic is due to a trading strategy called short squeeze. So a short squeeze occurs when a stock's price jumps sharply higher, forcing the traders, who we call short sellers, who had bet that its stock price will fall, they force it basically to buy it in order to limit even greater losses. So essentially the short sellers who were betting for the stock to go down, they essentially had to exit their positions. In order to exit their positions, they have to basically buy back the stock. So their scramble to buy, in addition to investors who are buying the stock, essentially added the upward pressure on the stock price. So this is the reason why when there's a lot of short sellers who are betting the stock will go down, if the price doesn't go down and it's going up, these short sellers will be very quickly to cover and exit their positions, and essentially causing this massive stock price increase. On January 27th, 2021, Keith Gill posted an update on his investment, and it showed that he had a total net worth in GameStop stock just shy of $48 million. So let's look at the details. Now, what we know so far is we know that he bought 10,000 shares of GameStop at $5 and bought also 5,000 long call options at 20 cents. So let's go through this. So you can see here that he had mentioned total net worth around $48 million worth of GameStop. And you can see here, this is the stock that he bought. So he bought this on an average price of $5, but what he had did did was he had sold some of it and actually bought more. So you can see that the price paid was around $15. So he still had about 50,000 shares. And as of January 27th, the stock price was $3.47, resulting in a total value of $17,375,000. So his total gain on his stocks was almost $16 million. So this is also the call options. He bought the April 16th, 2021, $12 strike price call option. He actually bought this at 20 cents. He actually had bought 5,000. So he actually had sold 4,500 of it. But his 500 call option contracts that were left were still worth over $16 million. You can see here. So this figure here is cash of almost 14 million. So what we can assume is that he had sold a big portion of his stock position since he had initially about 10,000 shares. He bought more, accumulated up to 50,000. He sold some of that, and also he had sold a big significant portion of his call options, which result only in 500 call options. So mainly the profits that were generated probably were from the call options. Now what he has disclosed that since his January 27th, 2021 post, he has not sold all his stocks and call options and still owns the 50,000 shares of GameStop stock and 500 call options. However, on April 16, 2021, Keith gave a final update on his portfolio, and in fact he had actually held on to his 50,000 shares, but in fact accumulated more than 200,000 shares in total. So he did this by exercising his 500 GameStop long call options, essentially to get 50,000 more shares at a strike price of $12. And we can assume that the rest of the 100,000 shares that he has added, he bought it in the open market. So as of this update, his 200,000 shares of GameStop was worth over $31 million. Now you can see here. So on average, the price that he paid was about $55. Okay, so we can assume that based on his previous update, the stock was around average price about $15. So he bought more in the open market, now raising the price, average price per share to 55,000. You can see the 200,000 shares here and 31 million, and he used that 18 million, a big portion of it, to buy more stock. So you can see as of April 16, 2021, his total net worth in GameStop stock was $34,473,000. So what are lessons you can learn from this trader who hit the home run on this trade? First of all, the trader identified that this stock was hated by Wall Street hedge funds who bet big on the stock going down. At the time that the stock was trading under $5, it had the highest percentage of short interest of any stock in the entire market, over 100%. That meant that if the stock had any remotely good news, and if the stock price started to rise, because of that, there will be enormous buying pressure on the part of hedge funds to cover their short positions before they lost too much money. Second is the trader utilized a high leverage asset like derivatives called call option contracts, which allowed the trader to speculate on the price of the premiums paid on the stock. Even though the stock price went up more than 2,500% from $20, the price of its premiums went up 163,000% for him, and therefore it allowed him to make multi-millions off his position. Third is be patient. If you have a strong conviction for the company's prospects, then you should continue holding the stock. In fact, his initial position of GameStop stock was purchased in June 2019, and at one point he had lost over half his initial investment. So when he first bought into GameStop, he was ridiculed for putting so much money into what was supposedly a failing company. Even when he was losing money and the pressure was growing to sell and move on, he stood by his convictions and stayed patient. His original thesis hadn't changed. The stock fundamentals hadn't changed, so he continued to hold and accumulate more shares. Fourth is, it's extremely useful to have a good understanding of the company's financials. Keith, who was a value investor rather than a day trader, dug deep into the company's finances and was able to see an opportunity for the company to utilize its massive cash position to innovate into becoming an online retailer. If you know the fundamentals of the company, you don't fear the company going under, but rather see it as an opportunity to accumulate shares on the cheap. Lastly, another lesson that I spoke of in the previous video is don't sell too early and look to maximize your profits. The fact that the stock went parabolic and he had the conviction to hold on to his winning position takes conviction and patience. In the end, he did end up taking some profits off the table, which is approximately $18 million, but at the peak he was up over $48 million. Thanks for watching. If you like this video, there are 3 things you can do. First is smash the like button for the YouTube algorithm, hit the subscribe button to watch more videos like this, and hit the notification button so you'll be notified of future videos where I profile the best traders. Second, if you're looking to learn how you can be the next top trader, please go to my website, mikesir.com, to download my free ebook, Become the Next Millionaire, where I profile a few of my millionaire students. Lastly, if you're looking for a mentor and want to learn directly from me, please go to mikesir.com to apply to work with me.